How's it going out there? It's July 28th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Man, what a crazy 2 weeks it's been. Just came back from opening day in Saratoga, which was the 18th. So I went there for about 5 days with my friends. We usually go away every year. We haven't gone away because of COVID for 2 years. So it was just a lot of fun. But coming back, got a little crazy. I know some of you might say, well, you had a vacation. What's the big deal? Still, get very, very busy these days. So last week, decided to fly my team here. A lot of important meetings, especially about our CEO token. Lots of great stuff going on, which you guys will learn about in the coming weeks. Really, really fantastic stuff. And it's always crazy when my team's here because we have meetings all day. I want to entertain them, take them out to dinner, have a few drinks, have some fun. But, it's just really, really busy when they're around. And plus, you have to do your daily activities and update and Twitter posts and, write your newsletters and stuff. But, I do like entertaining them. Plus, meetings all day. Now, that's just a small part of it. Because my kids are in summer programs. My youngest is doing gymnastics like crazy. She's doing awesome. My oldest just started her first job. 13 years old. She's babysitting. She went through all those certifications, everything. CPR, fantastic. I'm proud of her. And I got to drop her off, but she's making money. Earning her keep about time. I don't think I earned my keep till I was like 23. But I'll take 13. That's awesome. She likes to work. So my wife usually does so much behind the scenes, driving them back and forth. I mean, she does all finances. She's amazing. But unfortunately, she decided to get food poisoning. And that came out of nowhere. We've been eating the same things, hanging out. Doesn't matter. I don't know how it happened, but it happened. So now it's full court press, and I'm basically the only one playing, which is not easy. I know a lot of you have been there. I have kids. I'm driving the kids, getting them dinner, dropping them off. Again, the team's here. They have my mom out of nowhere, who's been doing pretty good, considering, she has a colostomy bag for the rest of her life. She has to give herself injections. She's got 2 nurses coming to the house every week, and she probably takes 8 pills a day. So optimistic, so happy, just always running around, whatever. But she has really bad back problems, and she can't really walk around. And, I bought her a house. She lives a couple miles away. And now I have to go to her house, making her food, taking out the garbage, get the mail. For me, I'm like, Mom, listen, the best cure for this is take Vicodin and have a couple beers. I said, you'll be walking around tomorrow. I mean, that's why so many people were taking Vicodin, right? Nobody talks about that. It's terrible. People died. Sue everybody. Make as much money as you can. There's a reason why billions of people were taking that drug. I said, she pushing 80 now. But anyway, they gave her muscle relaxers and, it's making her fall asleep. And hopefully that back pain is getting a tiny bit better. But I've been through that with 2 back surgeries. And, that pain you just got to live through until it doesn't hurt anymore. So, which is pretty crazy. But again, that's something else that came out of nowhere. Then I almost forgot for some reason. I don't know why I forgot this. I have no idea. I can't believe I forgot. But then I quickly remembered that I live in Florida. I forgot that for a second. I don't know why I forgot it. Since I have people working on my house, and I called these guys weeks ago. So I need new sod for my front lawn. In November, I got new sod from a different company, which is guys who install it, forgot to treat it with fertilizer. So immediately, weeds started coming through. I called them for a week, another week. They just stopped coming. I don't know why. And then my lawn kind of got lost, and it was just weeds everywhere, right? So it costs a lot of money to put sod. It's a brand new sod, right? So I had to do it again. So once these guys stopped coming all together, I said, all right, let me hire somebody else. And I called those guys a few weeks ago. I also called guys who are replacing my windows, since my windows are really bad. They're starting to fog up a lot. They've been happening over the last 2 to 3 years. So I'm just replacing the windows, or the glass in the windows. And, great guys. And calling these guys for weeks. All of a sudden, out of nowhere, they're both like, okay, we're showing up. We're going to show up in the same week, right? Again, everybody, team's here. Everybody's sick, going crazy. They're both going to show up. So I'm like, all right, cool. I don't care about being busy. We're going to get everything done. It's going to be fun. It's going to be awesome. So they both decided that they'll start working on my grass and my windows. This is last week, and this is the 19th. Of course, the grass guy decided not to show up on Monday. I don't know why. He just said, didn't give an excuse. He's like, oh, no, we're going to come tomorrow. I was like, all right. So they decided to come tomorrow, and they said tomorrow morning. I think they start in the afternoon. And they didn't have enough sod. They needed one more pallet to fill out my entire lawn. So they did a good job when they did. They had a bunch of workers going, they did the whole thing, but they just underestimated the size when they measured it. So it's a pretty decent sized spot. And they said, yeah, we'll come back tomorrow and, we'll be done. So they did. They come back the next day, which is Wednesday, to fill out last spot. But the grass from the new pallet is much greener than the grass for the rest of my lawn. So my lawn looks great other than that small part in the middle where it looks like the sun is always shining on it, just that one piece, right? So that's what my lawn looks like, right? Looks like, just the one bright spot in the middle. Now, the window guys, really cool people, like these guys. They started on Friday, this past Friday. Supposed to get there at 8:30 a.m. I'm like calling them. It's 9, 9:30, 10, 10:30. I'm like, hey, when you guys come, oh, no, we're going to be there. We're going to be there. Okay, cool. Wound up coming, I think around 10:30, 11. They left at 3:30. And that's That's a long day for people in Florida. That's a busy working day for Florida, that day. Not me, who comes in here like 7 in the morning and leaves at 8 o'clock at night. No. 11 to 3 is like, actually those are really good hours for people working in Florida. So that wasn't a bad day. So I thought they'd finish by Saturday, which is this past Saturday. It's Wednesday today. And it looks like they won't be finished until Thursday or Friday. But yesterday they said, hey, we're going to be at the house at 9 a.m. Going to be there early. They came late. And today, they said, hey, we're going to be at the house early today. We just got, caught up or whatever. And as of 10 o'clock, they still weren't there. So I don't know if they're going to finish, Thursday, Friday, Monday. I have no idea. I mean, it should be like a 2, maybe 3-day job. And now we're pushing, a week, maybe longer. So I had my team in last week. My mom's back is shot. I have to help her out. Wife has food poisoning. Dropped the kids off everywhere. Had these guys working on my house. No idea when they're coming or going. I really don't. I have no idea. My wife's texting me. They're coming or they're going? I have no idea. Still waiting for the landscapers to put in plants and rocks around my trees. I have no idea when that's going to happen. This is after they just installed the grass. It's like, they disappear into thin air. All right, we'll be back. We'll be back. Whenever someone says, we'll be back, that's them saying, bye, I'm not going to see you again. Which is, I'm getting used to like the terminology in Florida. It's pretty cool. So, having partners in town, only see in person maybe once a month or every other month or so. And in the middle of all this, we have some great things going on, security tokens, some amazing meetings, calls. Just this industry has opened up tremendously, guys. I can't tell you how many people are reaching out to us to learn how to tokenize their business and assets now. It's just, this industry is exploding. We are right in the middle of it. And again, anyone's a CEO token holder, just really, really good news coming up with the token because, the last remaining piece is liquidity. And it looks like, we're on the verge of getting that. So really exciting stuff coming over the next weeks and next months, and been working hard to make this happen. So that's very, very exciting, and that's why I have my team here. Also, we can't forget it's earnings season, which is the greatest time of the year, right? So I love to listen to all these conference calls. Biggest companies in the world just reported. They did pretty well. Those Microsofts, Apples, right? They did okay. The Googles. I'm going to break that down with Daniel later on of how much money these guys generate net income, how much in sales just over the past 3 months. These numbers are absolutely insane. And yes, I know those companies all reported blowout earnings and they fell a little bit. We're going to talk about those trends later with Daniel. And on top of everything, which is the most important thing, more important than me getting at my Curzio Venture Opportunities newsletter today, is we're officially launching our first new product in about a year, which is the Big Money Report. And I say official because we're now opening this product up to the masses. Actually opening up to the masses tomorrow. Any one of you listening to this, okay, it was open a little bit earlier for paid subscribers. Now everyone listening to this can subscribe today. Go to www.bigmoneyreport.com right now. You can learn more about it. Great presentation. Really excited and proud of this product. And you're about to see why. Because today's interview is with Luke Downey, who we had on maybe about 2 months ago. He's a 15-year vet sitting on institutional trading desks at Cantor Fitzgerald and Jefferies over that time, trading anything from options, stocks, was even head of ETF sales. But his job was to watch billions on a daily basis change hands through institutions. So basically tracking what the big money were buying, what they were selling. And now he's bringing that expertise to you. Average investors, mom and pop investors, where you get the opportunity to invest. This is key, guys, alongside the biggest fund managers of the world. So I'm not talking about investing after these guys, which, you look at 13Fs and say, okay, hey, Warren Buffett bought this, I'm going to buy it later. And you don't even know with Bridgewater, they could be out of these things 3 months later, even though they have to report that they owned it in a certain time frame over the past 3 months. I'm not talking about buying it then. I'm talking about buying it alongside these guys. And you're going to see charts and figures and everything in our presentation of why this is so important, why this strategy works. And Luke's system, it involves buying some of the biggest growth names in the industry, which means a lot of people stay away from these names because they think they're too expensive. These are names that are already up 100% over the past 24 months. And I get that too. When I'm looking at a stock and it's at $5, $10 or whatever. Say if it's at 10, I'm looking at it, I'm like, man, I really like this stock. And then next thing I know, it goes to 15, 17. I'm like, shit, I missed it. I always look at these things like a year or two later and you'll see that same stock at 40 or 50. Okay, that's the way you see when these companies are growing earnings that fast and filling into those valuations. And we saw it with Netflix, we saw it with Amazon. These are all companies that Luke has owned throughout his career and still own today. This isn't like trading back and forth, back and forth, back and forth. No, these are buy and hold names that are growing earnings incredibly, that institutions just started buying. I mean, you look at Netflix, I remember people thought they missed Netflix from 50 to 150 and they were pissed off. You know, what is it, 500, close to 500, a little over 500, depending on where it is today. Amazon went from 2 to 900. We recommended in our newsletter around 950, 970. And, you know, again, 970, you think you missed it. What is it? 36, 3,700, whatever it is today. So this style of investing, this newsletter, it's unique. Luke already has 6 picks in it. Almost every one of them are up. And it's in a market where most stocks are down over the past 3 months. I'm going to break that down and talk about that later with Daniel, how these are very, very difficult market conditions, even though we're close to all-time highs. Most stocks are down and down big over the past 3 months, outside of a few of the bigger names, which have a much larger weighing in the major indices. So, great newsletter. Made this newsletter affordable for everyone. It's under $100 for the full year. Also has a money-back guarantee, so you can look at it. If you don't like it, no questions asked, we'll give you money back. Really excited to launch the Big Money Report. And after this interview, you'll see why. So get to my 101 with the newest team member of Curzio Research and editor of the Big Money Report, Luke Downey. Luke Downey, thanks so much for joining us on Wall Street Unplugged.
It's good to see you, Frank.
All right, so we have really exciting times because we are launching your newsletter to the masses. We launched it to a select group of individuals and subscribers at Curzio Research, but now we're launching it to the masses, and it's the Big Money Report. And I guess let's start there, because this is something in this style of newsletter, Big Money Report, something you've been doing for a very long time, almost your entire career, mostly for institutions on the sell side. Let's talk about the Big Money Report. What is it, and why did you choose to, I would say, leave the sell side and focus on mom and pop investors, individual investors who are going to benefit greatly from this product?
It's a great question. I was looking at big money, when I was trading all these big orders, whether it was ETFs or stocks or options. And I just noticed, Frank, that, whichever way these institutions were going, that's kind of, they basically led the market. And so while it's fun to sit there and trade and make your brokerage and your commission and all that type of stuff, what I found myself doing was talking to portfolio managers, talking to traders, trying to understand exactly what made stocks move. And of all the research that I was getting and that I was looking at, and this is, going back to late 2010, 2012, 2013, that type of time, I just thought that there was so much promise by looking at data. And so, me and my former boss, who is now a business partner of mine, we just got our heads together and we said, we should be trying to track this type of order flow that we were seeing on the desk ultimately. And we built up these cool algorithms and just started to see, could we see the waves of big money? And in fact, we could. And then we honed that process, over time to look at single stocks, look at ETFs, see which way the juice was going. And, at that point, while I was trading there and having a great time, career was literally at highs, I just wanted to follow my heart. This is what I wanted to do. I really wanted to become an analyst, a researcher. I wanted to offer something to people, retail investors, to see the market the way we were seeing it on the trading desk. And so creating algos to look for this type of unusual trading activity. I'm telling you, man, it gives you a lot of insights that you're not really getting on your typical news media outlets. And so that's what it was all about. It was just trying to show people, a different way to think about why stocks do what they do.
What I love about this product and why I'm so happy that you chose to launch it under our umbrella, Curzio Research, is there's so many investors that miss out on the stocks that you're going to have in this newsletter, because it's not a newsletter where you're buying, stocks that are completely out of favor, that are terrible. Usually these are stocks that start seeing huge earnings growth, and then they've gone up already. And a lot of times when people want to buy a stock and they're like looking at it at 5 and it goes to 10, they're like, shit, I missed it. Oh, I'm out of it. I can't believe it. And next thing you know, that stock is 30, right, 40, 50. And then what you see with the fundamentals, right? Even with, people forget, 2003, 4, you're looking at Apple and Netflix, they had 60 to 100 times PEs on them, right? Look where they are now, up tens of thousands of %, where people are like, I can't touch these things. But your system is showing them how this momentum is gaining, and plus you're seeing big money in there. Let's go into that, because I think when investors get a look at this product, they might say, oh man, you're buying this thing that was up like 100%. But as we've seen with the Netflixes, as we've seen with the Facebooks, as we've seen with a lot of growth stocks, not even the biggest ones. I'm not even like cherry picking. If you look at some of the great technology, biotech companies, even regular companies, once they see that growth, it takes off. How do you find out when to get into these names? I mean, you use different systems, use the big money index. Why don't you talk about that? Because I think that's going to be a big question for new investors.
Yeah, definitely. So, I mean, look, we got to go all the way back. When I started trading, this was, my goodness, could be 20 years ago when I started to really dabble in stocks. There were just a couple of things that I understood intuitively. I was a researcher, and I would look back and see these charts of the greatest stocks out there. And they had a couple of things in common. One is their charts went up and to the right over time. Okay. And not all stocks did that. It was just very few ones. It was the great ones, right? It's the Amazons of the world. It's the Apples of the world, right? So that was the first thing, is to focus on stocks that are actually going up, right? Because they usually continue to go up. But to really look inside of that chart, is you need to figure out like what is driving all of that growth. What is driving that stock? And a lot of these companies, even though they're in different businesses and they have different profiles, they have the same type of revenue and earnings growth. And so just like what you're talking about, where you see some of these stocks and they have these high PEs, and people don't want to touch them, sometimes they're so early in their life cycle that you have to pay up for that growth. And then what you see is years later, they grow into their PEs, and their PEs might have started at, say, 400, and now they might be down to 80. And then, 3 years from now, their earnings continue to go up and up and up. And then it basically becomes like a utility at some point. And so using the big money indicators and the big money index is really showcasing that third signal that we're looking for. So again, as I just said, you're looking for charts that are going up and to the right over the long term. We're not looking day to day or anything like that. We're looking over the long term. You're looking for companies that have just great fundamentals, and typically those are the ones that are growing their sales year after year. They have a great product. People like what, they offer. They're changing the landscape. They're helping people out. They're making their lives better, whatever. And then that final thing was what I learned whenever I was trading on the trading desk, is that some of the best portfolio managers out there that I knew of were buying some of the same stocks, and they were these high growth, high quality stocks. These aren't, dumpsters that are going up. This isn't fool's gold. These are companies that have real businesses. They continue to generate a lot of profits. And I just got to the point where over the years, I was afraid to not invest in them, Frank. I didn't want to miss the boat, And so my whole thing is, look, you may not win every time, but if you just get a few of these stocks, I'm talking about, these are what I call outliers. These are the ones that just can transform your portfolio. You're going to be sitting pretty. So it's a process of really sifting out the garbage and focusing on what I think is going to be the next big winning stocks.
Yeah, and it's amazing that you say that, because people look at a portfolio and sometimes they want to look at it as a percentage of winners I have to losers, which is meaningless, right? Because you could have 10 stocks in your portfolio, 9 are losers, you had 25% losses on it. But if you have a Netflix, you just bought probably a new island, right?
Great portfolio.
So, when you look at it that way, and I look at your portfolio now, and for Curzio One members, we have beta versions where we get feedback from them and say what they like, what they don't like. It's great where we tailor our product to our customers, right? That's the way it's supposed to be. And I think you have 6 stocks in the portfolio now, 5 are up, but you're going to see these are even your last pick, which is a company that I've never heard of, believe it or not. And it's, I think it was a $20 billion plus market cap, a growth name, but there's some of these names that come on your radar. I guess, for me, when I'm looking at this is, how do you look at the big money index and not get that head fake, because what we don't talk about, a lot of analysts don't talk about, is we've been doing this for a long time. And the reason why we're pretty good at doing it is because we got our ass kicked a couple of times, right? For making mistakes
Sure,
through this
absolutely.
process. So how do you know where the big money's coming in? And then when you're talking about big money, you're looking at even the algo trading firms that come right in. I mean, the Renaissances and the Bridgewater. I mean, these, $100 billion plus funds that swing money around like crazy. But how do you know when that money's coming in and how it keeps coming in? Because you see that trend. You'll see it like go away, sideways for 6 months,
Right.
maybe a year, decent. All of a sudden, you're going to see that big money come in, and that's where you're able to tailor it. But, or tailor to buy it. So how do you figure out that, hey, this is for real, big money's coming in and big money's going to stay? Because it seems like once the Renaissances and the Bridgewaters get in, I feel like they're first and second all the time, maybe Two Sigma third, but then you see like a massive amount of money pour in after these guys, right? So I guess, how do you avoid the mistakes in this? Because I'm sure there's been some that big money has come in and maybe hasn't gone up, but I guess that's my question. Yeah.
Well, listen, after you've been doing this for a while, you start to focus in on, kind of like a pitcher, right? It's like if you've got a great fast pitch, don't focus on your curveball, right? Just really just zero in on that fast pitch. And that's what I've been trying to do. And so we're getting a lot of signals that come in every day, right? You're seeing stocks that are going up on these big volumes, and it appears to be buying in the stock, right? And so what I like to do is sift all of those stocks for the fundamental characteristics. So let's go back to, say, January or February. What did we see? We saw a lot of buying in SPACs. Now, listen, I just had been around long enough. And look, there's a lot of people who've been around a lot longer, but I remember trading those things years ago, and they were just roach motels, and so a lot of people were wondering, why are you not recommending SPACs, and why are you not looking at this? Just because I've seen this before. And I don't know how many it was. It may have been like 500 new issues. It was something absolutely just crazy. You couldn't even keep up with all these tickers. And so I was able to weed that process out because I have a history that tells me that chances are you're going to lose money if you buy into these. Now, I could be completely wrong, but that was what I had learned, right? So then you start to think about some of your biggest winners that have come along, right? And so some of the names that I bought years ago were like the Netflixes, the Teslas, still hold those, and a number of other stocks. And just listening and trying to understand what made them so great. And one of my favorite things to do is, during earnings seasons, even right now, is I like to listen to the calls. I like to read about what the company is actually saying about their business. And as far as how is their business? Is it accelerating? Are they on a hot new trend? Are they guiding higher? Are analysts behind the ball? If you can do that, and there's very few companies that are doing that, right? If you can just put those companies, put those together, right? Sift out all the rest, and then really just focus on, is the money continuing to go into those stocks, right? Because a lot of times the big money that continues to show up in these stocks, and that means it's pushing the stock higher day after day, week after week with great fundamentals. If you just focus on those types of companies and they have, forward guidance that continues to be above and beyond what any of the highest analysts were expecting, well, that is a recipe for just finding some superior juice stocks. And so that's what it really comes down to. And so very picky, very choosy. There's a lot of, copycat stocks out there, that are, they're the number two or they're the next best. Let's just focus on the best. Let's focus on the number one.
Now, this system has led you to talk about some of the stocks that's led you to that you still own today, which I think is fascinating, which is awesome, and I'm a little jealous. But just talk about that system, that part of the system, and how it's worked for you in the past personally, because you're investing in some of these names.
So this is going to be like a highlight reel, obviously, but some stocks that I have owned over the years, continue to own, and this might be in personal and managed accounts, but IAC, which is just a great company. They continue to spin out great companies. Match came out of that company. Vimeo was the latest one, which we're actually on right now. That has just been a great company. Netflix, Tesla, Google, Chipotle Mexican Grill, PayPal. There's a lot, Frank. I could be honest, but what was so great about PayPal is I remember when I first got to Wall Street and MasterCard had come out. I think the market cap was around $8 billion. And I would just read the guidance, how they would just blow it away. And so it was one of those stocks that I just gravitated to, thought it was just an amazing company. So years later, whenever you have a PayPal and you have a Square, which I own both of those, it just reminded me of just how great Visa was and how MasterCard was, that it seemed like a no-brainer to invest just a little bit into those stocks. And so you get a little bit of that muscle memory, and then you start to see some of the guidance, and you see that they are, just innovative. And, what they're doing in crypto, what they're doing with PayPal's doing with Venmo, and what Square's doing, and how they're lending to small businesses. I mean, this is just, it's a hard story to bet against over the long term. And it's got big money. So there you go.
And tell me how, because one of your last picks, you say like there's money flowing into the healthcare sector. So it's not just individual names you're looking at, right? It's kind of sectors where it almost narrows you down because you're seeing, for the week or for the month, hey, a lot of money's pouring into this sector. Let me look at some of these healthcare and look at and see if we can find something here where money's pouring in. I mean, is it kind of, seems like it's a top down and also a bottom up system. So top down when you're looking at sectors or even the economy or seeing money flow in, and then bottoms up where you're picking an individual stock. But it seems like this is like everything incorporated, where it's not, hey, this system told me to buy this stock. No, you're listening to conference calls, you said, you're looking at earnings. It's almost like your secret sauce on top of this. But how do you use it to really find what's coming in and out of sectors, which is, I think, is just as important?
Yeah, so each morning we come in and we're looking at thousands of stocks every day, right? And we're trying to see which ones are seeing this big money activity. So that is the sifting process right there. Then from there, we're able to separate it out by sector. And we want to see just, where is the money going today? Where has it been going last week? Where is it going? What's the trend the last month? As an example, what's been going down, what's been getting sold recently has been Chinese stocks. What's been going up recently over the last couple of days has been these mega cap growth, just high quality stocks. Pretty thin breath, but those are the names that are leading the indexes. So you're able to see that. You're seeing the wave of money. And then you take all those stocks, you rank them by fundamentals, right? From 1 to 100 effectively. And then you really go into the process. And here's the thing. So we've been looking at this for, close to probably 10 years. What I have found is it's the same stocks over and over year after year that continue to rank the highest and see the most big money going into them. So, whereas you're seeing healthcare stocks are going up, it's a lot of the same names that continue to just get that big money, like Intuitive Surgical. It just continues to blow away numbers. It continues to see big money. And then you also see a lot of other companies that are similar, healthcare companies that are very profitable. They have they're instruments companies, they develop some type of machine. It's all the same. And you just see that the big money just kind of piles into sectors. Maybe they're going into energy one day, they're going out of growth one day, they're going into small caps, all of that stuff. And you kind of get to see the narrative, right? So that's like the big picture of what's going on. And then inside of that is to really hone in on, where are the outlier stocks? Like, where are the best ones? You see them, they come on your radar. You start to see that big money day after day. I just go in and look under the hood and just try to understand the business. What's their guidance? Are they making money? And then every now and then, it's like a slow, fat pitch comes along that you just want to take a swing at.
And I mentioned this earlier, and I can't stress this enough, because even for myself, sometimes when I'm looking at a stock, I'm like, wow, and you just get so busy. I'm like, wow, I just saw the core list, the conference call, that's really interesting. And next thing I know, it'll go up like 25% in 2 weeks. I'm like, shit. A lot of times you think you miss it, but when you're looking over the year, this company, it's just getting started. How do you convince investors? Because it's easy on the institutional level, right? It's just, hey, money flowing in and out, this is our system, whatever. But convincing people to buy a stock that's already up, when they see the results and they read your system, sign up to your newsletter, they're going to understand it. But you explain it now, because that, I think, is the biggest challenge for investors. I just feel like so many investors say, oh, I missed it. I was going to buy this and I missed it. And those are the same stocks that are up 2, 3, 4, 500% over the next 2-3 years. Is it something that you have to trigger with them? Is it a trust issue? It's because it's almost like we're looking at something that's a blue wall, but you try to say, hey, you know what? You got to look beyond that. And it's like, I just feel like investors can't look beyond that sometimes. I think it's a tough task, but bringing this to individual investors, I guess, is it How do you explain it to them to say, hey, listen, just trust me, this is the system, this has been working, when they're going to be buying stocks that are very good names, quality names, but they're probably well off their highs. And, again, those are the stocks that tend to go high, especially in this market with zero interest rates that staying here forever, more money flooding the market infrastructure. I mean, perfect conditions for these large cap growth stocks to continue to grow and grow and grow.
Sure. No, a lot of people, they get into investing listen, when I started, I wanted to get a good deal too. It's just like whenever you go to buy a car, well, not now, because there are no cars, but typically when you go to buy a car, you want to haggle, you want to like, hey, can I get a discount? It doesn't work that way in the stock market. The best companies out there, the Fifth Avenue real estate of stocks rarely comes on sale, just because these are the dominant companies. These are the ones that are changing the world. And I think a lot of new investors, they either have to learn that or they get out of investing. And so the message that I try to teach people is, always have a message of teaching, by the way, just really saying, look, there's a reason Apple continues to go up year after year after year, decade after decade. Very rarely are there sell-offs. And then when they do, it doesn't last, that long. And especially we're seeing that in this market since the pandemic, even including the pandemic, things just go straight up, and it's the same stocks that keep going up, so the big money is just gravitating to a lot of the same players. When big portfolio managers want to get risk on, typically they do it the way they always do. They go buy a certain sleeve of stocks, usually the high quality ones, right? And that's how they do it. So, I have always found that, if you're looking at the bottom of the barrel, you're going to get bottom of the barrel returns. But, if you're really trying to look for the best quality of anything, the top shelf, you are just going to have to pay up for it. And these companies, they will eventually grow into their PEs, right? They will eventually become utilities. They'll probably pay a dividend. I think it takes a while for new investors to understand that, if you're trying to find, the next Amazon, if you would have bought it at any point, basically over the last 15, 20 years, and if you would have held it at some point, you would have made a lot of money, And so if you can kind of show people that, that is the playbook, that is what has worked in the past, it's probably going to work in the future. Usually they come around.
Now, take us through someone who's just subscribed to your newsletter. What are they going to see? So it's, the pick, you have a companion report, which you write. I know you're going to have a stop loss for each company, which limits your risk, and a buy up to price, right? But talk about, what they get, because I think people will want to see that, even though, there's a money back guarantee. You can see it and cancel if you want. All of our product, our front end products have that, because, we want to be open and upfront, because we have really good stuff. And when you see it, usually people subscribe long term. So, but what are they going to see as soon as they get in there? Because I know there's also a page where you teach them, your system, and they have, a whole full report on it. But also, what about the pick specifically, right? Because everybody wants to get the pick. And when they get the pick, go through that process. I think it's going to be pretty cool.
Sure. So basically, it's going to be 4 parts. So you come in and I try to talk about what's in the news, what's the headlines, right? The headlines du jour. So as an example, right, we have a new pick that's coming out tonight. And so I go in and I start talking about the headlines, right? So what are the worries that investors are faced with, right? Right now it's inflation, it's interest rates, the Delta variant. And then I try to put some type of perspective in there, trying to see if I'm worried about that, if I'm not worried about that. And then I will talk about the big money. Okay. I'll talk about does all of this fear, all of this anxiety, does it fit the narrative of money going in and out of stocks? And usually it doesn't. Sometimes it does, but as of right now, it really hasn't. And then we start to talk about things that are coming up, right? So it's the summer, right? It gets a little bumpy. You got a lot of your traders, they're out at the Hamptons, they're sipping rosé. They're not sitting here, trading their stocks. And so for that, we need to expect a little bit of volatility, right? You have hurricane season that comes in the summer. Same thing happens for stocks. So you kind of want to give everybody a little bit of a heads up of what to expect, right? And then also back that up by data. So then we go through some really cool data and talk about, where's the money flowing, what sectors, what's the big money index doing, which is basically an indicator that is looking for if money's going in and out of stocks, because you want to be on the right side of that on the short term. And then finally, we will come up with our narrative, like what's the outlook, for the next month, right? Before I do another pick. And then we get into the stock pick. And I will talk about the story a little bit, just so we can familiarize ourselves with the story, talk about why this is interesting, why this is unique, how it came on my radar. Then I will usually talk about the fundamentals and talk about prior guidance, prior numbers, which way they're trending, why I think analysts are behind the ball here, and basically talk about the long-term narrative here. So again, we're not going to be looking for stocks to hold for a month. We're going to be looking for like a year plus. I mean, if you want to make big money, that's the way I found to do it. It's not day trading. Then what we're going to do is we're actually going to have that picture and then actually see, does the big money actually line up with that? We're going to look at some really cool, unique charts against that stock to figure out, is big money going into that stock? Is it a high quality stock? Does it rank really high? What's the market cap? What's the sales growth? All that type of stuff. And then finally, we'll have this buy up to price. By the end of the video, hopefully you're pretty bullish because I'm not a bearish guy. Stocks, they just go up. The great ones do. And then finally, we're going to go over the portfolio and we're going to talk about which ones are kicking major butt, which ones are not. Right now, just about all of them are doing really well. So, we'll do a little cheerleading and then that's it.
You said something under your breath there, which I don't think people caught, because if everything that you talked about, if you're reading that in a 12-page report, could be a little tough. What I love about this and what I'm trying to get all my editors to do, and it's very difficult, right, is to do video. When you do video first, you see the passion behind each pick. Then you get educated. Then you share your screen and people see exactly what you're looking at, because we all know, we've been in this business for a while, I've been in this business all my life, basically, is, people are going to buy stocks outside of your newsletter, right? They're going to get tips from wherever, and they could use these tools. So the educational component, but the video, it's tough because you have to have personality. You have to be good on camera. And I have to tell you, thus far, getting very, very positive reviews. I feel like you love the camera. You like being on. I like being on as well. It seems to me, it's real, right? You really don't know who's writing, even if they are writing or they're not writing, but just to see it and educate and see the passion behind it and the reasons why you're buying it. I mean, how does that feel? Because I know that's a little bit of a change of pace, but as soon as we said it, you're like, no, I definitely want to do video. This is great. And every single pick so far has been a video pick, and going forward, it's going to be video too.
I find that it's easy. I mean, you sit there and, whenever you're writing, something happens. You could get a block that, you need to say something a certain way. But when you do it in video, there's things that you can do. There's your mannerisms that can tell you, like, you can tell when I'm excited about a stock. All right. Like, like the seeds of greatness are in this stock. I'm going to be, getting super excited. If it's something I don't believe in, there's just no way that I'm going to be able to, tell you a story that I truly don't believe in. So I think video really helps the user, the consumer really understand your process. They understand your personality. They start to understand what it is that you're doing. And then hopefully they can start to do some of this stuff on their own, right? Because, you can give people fish, but, teaching them to fish, I think, is really the end goal here. And so, and then I think it's easy to leave a response too, right? So, if you ask people, hey, what do you think about this? And, send me some feedback. Do you like it? Do you hate it? Whatever. I feel like if, they're looking at your mug, it's a little bit easier than, like you said, anybody could write print. We could slap our name on it, but a video, you can't fake that.
No, you can't fake that at all. And yeah, that's well said with video, which is really, really cool. So, and by the way, guys, if you want to see this is on our Curzio Research YouTube page, video, but a lot of people do listen to iTunes, just listen to the audio, but we tape all of our interviews, tape all of our podcasts now, which is cool. I guess last thing here, which everybody loves, is, maybe some sectors. I don't want you to really give anything away in the portfolio, or some stocks maybe that you're looking into earnings season that hits your list, and it might be real difficult to buy something, a week before earnings, like, we saw UPS, right? I mean, just come out, you're like, wow, UPS, and, delivering products like crazy, everything's great. And then, they kind of said, well, we're not sure about the guidance, which I think we're going to see a lot in this quarter because supply chain issues is hard, right? So, and that company got nailed. So what are maybe some of the things that you're looking at, or maybe through earnings season, or even if it's a sector that you're seeing money start to flow into, and you're paying attention, because like you and I, we really focus on earnings season, and we're right in the heart of it, especially next 3 weeks. We're going to see tons and tons, hundreds and hundreds of companies S&P 500 report.
Yeah, no, I think there's two places that I really like, and the first one is going to be medical devices. There's a few companies out there. It's the ones that are growing their sales and their earnings, and a lot of them have already reported, and the numbers have just been so spectacular. I think that that's a trend that you can bet on, right? It's a healthcare, proxy. Are people going to continue to get operations and do different things in their body? Maybe there's some that help in a number of ways. I don't want to if I start talking about some of the specifics of these companies, you'll probably know because there's very few that do what I'm thinking about. But I would look at medical devices. They're really hot right now. The healthcare sector is looking really good. Also, you can look at some of these companies. They're dividend growth companies. Love dividends, man. That's the bonus level of investing. Semiconductors, which, we're writing a column every single week that's on your website that comes out, I believe, on Mondays, unless they change that, but it's usually on Mondays. Semiconductors have been really hot, especially with the supply chain issues. There are a couple of big time winners inside of that group. A number of them are going to continue to be reporting over the next couple of weeks. I think that is going to be some of the biggest winners out there. And, if you could look back and think about NVIDIA, years ago, it was such a big money magnet. It continues to be, but there are going to be other players like that are going to most likely have the same type of profile on a return basis going forward. So that's where I would be.
All right, man. So listen, we're going to leave it there because I can keep going and going and going, right? So, but, just picking your mind, talking stocks with you all the time. And Luke came down here, we met in person, and really great time. And, you met the whole team, and we're really excited to launch this thing. And I'm excited you chose us. That means a lot. I like original products. This is original. You're not going to find things like this throughout our news. We have small cap newsletters that focus on growth, but not what you're focusing on, where I think a lot of mom and pop investors miss these names because they just feel like, hey, they're late to the party. I can't buy Microsoft at $250 and now it's $370, right? So, these things keep going higher and higher, but, excited to launch this thing, guys. This is a newsletter. We made it affordable for everyone. It's under $100 a year, and there is a money-back guarantee, which, again, you can look at it and say, wow, these guys are full of shit and get rid of it, which I know is not going to be the case. But, if you give it a try, it is unique. It is an awesome letter, and I'm really excited to launch it. I'm glad you chose us to launch it, to launch your Curzio research, man. So looking forward to a relationship, looking forward to getting some subscribers. Yeah. And again, officially launches today, and really, really great stuff, Luke. I really appreciate coming on board, babe.
Yeah, no, I'm excited to work with the team. I like everybody. I like your real raw attitude when it comes to stocks and all that type of stuff. So, whatever the price point is, I still think it's too cheap for the value that you get. But again, we'll let the consumer, if I had this when I was starting out, who knows where I'd be today, Frank. But it's going to be a lot of passion. It's going to be a lot of work. And, we're going to be focused on quality. And, at the end of the day, that's where the winners are. So.
And I'm not going to lie here either, because you are going to come out with a special newsletter. It's going to focus on options using the same strategy that we will be charging a lot more money for, more specialized. But, that's coming out in a couple months. But, once you see what he's all about and this system, how to really take advantage of it, it's going to be really, really cool. So excited to launch that Big Money Report first. And thanks for coming on, man. I'll talk to you soon.
Thanks, Frank. Have a good one.
All right, guys. Great stuff from Luke. Again, that special offer is available to you at www.bigmoneyreport.com, which is podcast listeners. You subscribe to that today. And that approximates under $100 a year. We provide a really great bargain for that 30-day money-back guarantee, which means you can cancel whenever you want, no questions asked. I mean, we really focus on a customer service here. We don't want people bitching, we can't cancel, and telling everybody that, Curzio research is terrible. I just never understood that. Why people do that and make it difficult. But I want to hear from you if you subscribe. And even if you subscribe and decide to cancel it within 30 days to get your money back. I mean, we create products at Curzio Research that our customers want. We listen to you. That's why I tell you to email me, frankcurzioresearch.com. So again, positives, negatives, how can we improve this product? Also, I'll share Luke's email with you as well once we have that up and running. And you're just really, really, really excited to launch this product because it's unique. I feel like investors do not get into a lot of these names because they're very, very expensive and they feel like they missed the boat because they're up a lot. But you'll see these names continue to hit new highs like they have over the past 7-8 years. But Luke's job is to get into these names like the next Netflix, the next Amazon, the ones that are growing earnings tremendously that are off people's radar because they seem very expensive right now. And that's how he does it, through tracking where the big money is going. He's been doing it his entire career. I'm so glad he's bringing that system and bringing this style to individual investors. I'm very, very honored and humbled that he decided to launch this newsletter through Curzio Research, because I'm sure he could have launched it through any of our competitors, because that's how good this newsletter is. So again, questions, comments, feel free to email me at frankcurzioresearch.com. And if anyone listens to this podcast, you can subscribe or learn more, watch the whole entire thing, our presentation of why we put this newsletter together and why it's so special. And that's at www.bigmoneyreport.com. Now, let's bring in my buddy Daniel, senior research analyst.
Frank Curzio, what's happening?
Man, a lot is happening.
Yeah.
And I wish it was really dialed down on the personal end a little bit, because I just had a little bit rant of everything going on in my life, which is absolutely crazy right now. And again, everybody has these problems and stuff going nuts. It's just when everything hits at once, you're like, shit. But I kind of like when there's a lot of chaos. But,
You do operate well under chaos. I've noticed that. That's differences about us. Like Frank, and I mean that as a compliment. Like some people enjoy like, hey, this is going to be a busy as hell day. I'm more of a planner in that sense. I don't mind the busyness, but I do. You are a lot more calm when shit's hitting the fan than I am. I respect that.
You know what? I don't know if it's because that's how I grew up and it's so fast-paced. I didn't realize how fast-paced it was until we came to Florida, where, if the light turns green, I'm talking about it just turns green, and you're the first car there and you don't go, they're on the horn, beeping.
That's here. I respect that.
And here it's different because you don't realize your condition. Wherever you live, you're conditioned a certain way to talk. And when people are in front of me and that light changes, I'm like shaking. I'm like, what am I shaking for? What am I shaking for? It's Florida. You can wait 10 minutes and miss 2 lights in a row and people are cool with it. You
can move out of New York, Frank. You can't take the New York out of you.
I know, you really can't. So, but
we do have a lot of stuff going. We got China crackdown. We got earnings. Delta variant with the whole coronavirus. How do you want to kick this puzzle off?
For me, I wanted to start with the Olympics. I don't know if you saw the Olympics.
Oh boy, what about it?
Oh man, I just want to start with the Olympics really quick because a basketball team lost, a women's softball team lost, a women's soccer team lost. Now the women's gymnastic team, they got the silver medal, and a big controversy. And guys, I want you to watch this. I don't know if you watch it. You might have read a lot about it, but I need you to watch it because I watched it yesterday. I watched the whole thing because I taped it because my daughter's in gymnastics. I want to see exactly what happened with Simone Biles. And, she basically had mental issues. She said that she, basically walked out on her team and quit. And a lot of people who, the mental part, I get it. I understand. But when you have mental issues, that doesn't happen on the day, right? It doesn't happen on the day because her performance was bad the day before getting into trials. Her performance has been weak for her standards pretty much the past few months. And even into the Olympic trials where, they select the team. Now, she's on this team, the veteran. She's amazing. She's a million times better than anybody else. She's one of my favorite athletes in the world. I love this girl. And there's 3 other girls on that team who busted their ass for 4 years just to make that team. And Simone Biles basically quit on her team. She went once. She didn't do good on a vault. She had to do another vault, which she missed. And then she just said, I'm not doing it anymore. And it was almost resulted in an immediate loss where you could have put any other girl in a top 7, like the next 5 girls you could have put on that team and the U.S. would have won the gold medal. And that is, you look at the Fab Five and how popular they got, Cyril Bach, this was, this is the event. When I think of Summer Olympics, for some reason, I think of women's gymnastics. I think of that and the 100 meter. That for some reason, those are 2 that's summer. It's. And what I saw and what you'll see, and people might say, well, Frank, it's mental issue. I respect. You knew this was going on a couple months ago, okay? And you walked out on your team. For me, for someone, I played with a hairline fracture in my ankle in the championship game, and I taped it up, and that was about 25 years ago. My ankle is still fucked up since then. For me, I never, ever walk out. I'd rather her do bad on all the events and not get hurt, of course, and even if she did, there's a shot that they would have won. But when you see it and the way it happened and just her team going what's going on? And, they were trying to say at the beginning it was an injury, and it wasn't an injury. She was just like, I can't, my head's not in the right place. And it doesn't happen from the best in the world, the best ever at this sport. And for me, that really bothered me. I was like, man, you just, and she just stayed out there and was cheering the team and everything. And I don't know, just the whole Olympic thing and watching it with no one in the stands. What a freaking joke, which, again, to me, that pissed me off. I had time to watch that with my daughter. And even my daughter was like, how did she quit? I'm like, yeah, I get the mental issue part. I'm not trying to downplay that. But, that doesn't happen 5 minutes before you go out there. That's been happening for a while. If you look at the past performance in the past 6 months, she wasn't all there. A lot of pressure on her. I understand that. But you got to think of those 3 other girls who busted their ass to get there. They made that team, and it was supposed to be fantastic, and they're the best in the world. And the person that you think is supposed to be there and the veteran to calm everyone else down wasn't there. Anyway.
Is it over, or is there
over,
more events for
now
the
she just announced
gymnastics and stuff?
She's not doing the individual either, so which I think is, if she would have done individual, I would have been pissed, because if she did the individual and won and then lost a team event because she kind of quit.
Okay, gotcha. So it's not. They still have events and things.
They have
like that.
an individual now,
Gotcha.
but the team is that's a big event, the team event. That's really
absolutely
cool. You watch that; they're all pumped up, and congratulations to Russia. They did fantastic. Those girls were awesome, but. It's just a sad story. And again, just looking at Tokyo and how, I mean, Daniel, why are they pushing this Delta shit so much? I mean, it's so crazy. Now they're saying if you have the vaccine, you could get it. 95% chance you don't get it, right? And now they're like, well, you could get it. There's a possibility you can get it. And this is what they're pushing. The agenda is everyone that's getting it is getting it, the new Delta strand. But you know what they stopped reporting all of a sudden? They stopped reporting deaths. They stopped reporting deaths all of a sudden.
Who did?
Everybody. And nobody's talking, like everyone, new mass mandates are coming in. But they're not talking, like that's the end. That's the figure that matters is deaths. When it comes to COVID, it's deaths. You can get 50 million, 7 billion people have it. If nobody dies, it's not a big deal, right? But if a lot of people die, that's the problem. Right now, if you look at the deaths, and this is based on the last week of data, it's less than 100,000 people are going to die from COVID, which is way too much. Way too much. I get it. But if you look at almost every other thing, if you're looking at heart disease, it's like 600,000 a year. You're looking at Alzheimer's is over 100,000. All these other things are over 100,000. Now that it's just, you're closing stuff up, you're forcing it down our throats. I don't get it. I don't see it. I don't get every business across the board. You look at Coca-Cola, Boeing just reported. You look at all of them saying, hey, we're not seeing any impact from Delta. But for some reason, if you look at the media, it's back out there. You're going to die. You got to wear your mask. You got to immediately get the vaccine. If you don't get the vaccine, you're like a leper, right? I mean, you're like, seriously, if you don't get the vaccine, it's like, I don't know, it's like you're a terrorist.
Well, the good news is, Frank, is that's all going to get a lot worse, unfortunately. I noticed that yesterday, President Biden said that the pandemic is because of the unvaccinated. The USA Today has a headline about maybe the vaccinated people can help spread the virus. Yeah, the Delta thing is, the thing that has my attention right now is, just to your point, you're seeing a lot of headlines about warnings about new mask mandates and quote-unquote hotspots. So, the places that have been open the longest, Texas and Florida, obviously, are the big ones there. You then have the media and regulators saying, hey, you could have more shutdowns. And then you have the exact opposite. So I think Europe or Britain just opened their borders to completely vaccinated people. Mm-hmm. And then to your point, Delta, Starbucks yesterday said, we're not seeing any difference from the Delta variant in customers. Now, this is all halfway recent as far as the Delta in the big picture. And we're reporting or reading reports from companies the last couple months. But they have their foot on the pedal. They have, they're paying attention to what's happening now. So it's very easy to say, hey, we had a great quarter. Comps are great because of weak comps over, the shutdown in 2020 from the coronavirus. However, they could warn or give momentum to what they're seeing right now. And everybody's doing that. So unfortunately, it's going to be a wait and see on how all this plays out. But the big threat there is, Frank, what if they actually say, hey, you got to shut down certain business and local hotspots? What's the market going to do?
Yeah.
How do you not have volatility from that, I guess, is my point.
And that's what you're seeing now. You're seeing that volatility where people, for a couple of days, you know how the markets are, right? For 2 days, it was like, Delta, the market's crashing, get out. And then it hit all-time highs like a couple of days later, with the Fed mandate of inflation's transitory. I mean, they can't say it's not transitory, right? Or they're going to have to. So basically, by saying transitory means that no matter where the hell it goes, the CPI, who gives a shit? Even though that index was meant to never, ever, ever, ever show inflation no matter what, is up to 5% now, right? So it was 2%. It can go to 15%, it can go to 80%, and they're going to be like, it's transitory. It's such a fun word, right? It's kind of like just, hey, it's like, shut up, we don't care. But in real life, you're seeing it. You're seeing it across all these companies that are reporting who are drastically raising earnings. And also, it's an interesting trend that we're seeing. And, I don't want to get too much off the point because I had something else to say about the vaccine really quick. But what I'm seeing within companies is if you beat, you're not really getting rewarded that much. But if you miss, holy shit. I mean, we saw that with Boston Beer. We saw that with Netgear. Companies that have gotten smashed. UPS is another one. And you're also seeing what? You're seeing supply issues finally hit these guys. which means it's very difficult to forecast guidance. I don't know how Ford and GM are going to forecast guidance. I know you still can't get a car for 9 months easily. They're saying, it's over, we're fine. It's worse this quarter than it was last quarter. And I don't see this, working itself out this year, no way. But guys, you have to remember what's coming up. What's coming up in December? What's coming up in November, right? Black Friday. Now, all these orders, all these products, right? Now you're talking about these supply chain issues going into the heart of that quarter where most companies make the most money.
Yeah, absolutely.
And now what are you going to do? I mean, you almost have to over order, just, increase inventories dramatically because you don't know what the hell is going to go on with the supply chain. Also, there's a bidding process with the containers right now. Whoever bids the most, which is the biggest companies, are getting that spot with the containers because there's a massive container shortage. So, once you lock in, how does a small company compete with that? And you're seeing it show up where out of nowhere, some semiconductor companies warned and said we're seeing major supply issues. And Texas Instruments was pretty bad. And others are getting it done. But you're seeing a lot of volatility in earnings where you're not really getting rewarded, Daniel. But yet, if you really beat, but if you miss, you're getting destroyed. So just understand that logic going in because the next 2 weeks, 3 weeks even, you're going to see almost every single company report in S&P 500, lots of small caps. If you're thinking about buying something before they report earnings, be careful because the risk reward is definitely not favorable.
Yeah, absolutely. That's a good point because that's just going to test your emotions. And this may be boring, but I hope everybody pays attention because earnings season is fantastic, not only because you have to track the companies that you're invested in or portfolios or whatever, but it's because you can take information from so many different sectors and try to build a thesis or back up your thesis going forward. So you want to look at guidance, you want to look at buybacks, you want to look at capital allocation and such. But to your point, Frank, you just got to think about reality. Couple of the names that I can't wait to see report, I believe they both report on August 2nd or August 5th. But Boise Cascade is a wood products building material company, and their stock is well off the highs. I think it went over 670 during the huge housing boom and stuff. It's pulled back significantly. I don't have a position in it. We haven't recommended it. But my point is that you can read through that transcript and earnings call and see what they're talking about with prices, see what they're talking about with demand. CNBC just ran a headline earlier this week about how the housing boom is over, because it's done. And maybe it is, but
it's not.
Don't get so quick to just think that things end. Trends don't end or begin on a single day. So get out of that mindset as a day-to-day kind of thinker. And then Hanes Brands. I talked about this, Hanes Brands and Intel when I did the Frankly Speaking a couple weeks ago for you, Frank. Hanes Brands, with the Delta and the new mask mandates coming back, Hanes Brand owns the majority of their supply chain. Okay, that's one of the things that has me interested to look at their earnings because if you have supply chain crunches, plus they get 60-some% of their cotton from America, which means that over other retailers, you should have an advantage of supply chain management and or margins. Last year, they got a boost because they were just like innovative capitalism countries and corporations do. You fill gaps, you fill needs for society. So when mask mandates get mandated originally, what happens? A lot of companies started manufacturing what? Mask. Mm-hmm. How many companies switched over to help with ventilators when that was a big deal and we had shortages? That's what happens. Well, they got a good boost. I don't remember the number. I don't want to exaggerate. But it was a good earnings boost because of manufacturing mask. They could easily, if they comment like that next week when they report, because masks are now being mandated a lot and all that, they could get a boost. So just pay attention to what's going on. And, they have great brand awareness. They're internationally. And that's a good segue because we got to talk about China real quick.
Yeah, we can talk about China. And just real quick with the housing, guys, demand is off the charts, and there's no supply. I mean, prices are going to continue to go higher. This is I wish it was close because just looking for real estate or trying to buy a house. Again, I'm always looking for real estate, but it's for you to think that this is over based on a couple of figures. I mean, you see the delays. If you really look at the home builders, in some areas where they build, these houses and, they own the whole area and they build it specifically for that area, those homes, there's a shot that if you go in there that you're not going to be able to get one of those homes, a very, very good shot. Mm-hmm. And I've seen that already. I've seen that even in Jacksonville and other places and hearing from real estate agents where, for you to think that this is over when interest rates are staying low forever, the Fed's going to keep rates low forever, and they're not going to raise them for a very, very long time, probably past 2023. We all know that. They just won't. They're not going to do it before the midterm elections, of course.
2023, I like that. We got a number on paper.
2023, maybe, but they're not. I mean, if they're not doing it now, records at all-time highs, home price all-time, inflation through the roof, everything, and they continue to say this transitory bullshit without identifying what transitory means. Is it 3 months? Transitory is brief. It's supposed to be 3 months. We've had inflation for 3-4 months now. It's going to go out well into this year with supply chain issues and everything. So, we're looking into 2022, but I guess that's still transitory. Maybe 2 years is transitory. Maybe 3 years is transitory. But again, the Fed, by saying transitory, doesn't have to say anything. That's all they have to go up there and say, it's transitory.
Frank, we need a Wall Street Unplugged drinking game.
That's a perfect
Next week,
word.
we're going to drink every time we say transitory.
That's a perfect word. Whenever I do something like bad with my wife, I'm going to tell her, it's just transitory. It's transitory. I'm not going to do it again.
Report back to us. Let us know how that goes over.
It's just for now. Yeah. It's transitory. I'm going to use that word a lot. I think I'm going to use it like the Fed. That's a great word, right? I mean, transitory. That's a freaking awesome. Good for them. I don't know who came up with that, man, but they should get a raise immediately at the Fed.
Good for them.
That's such a great word. So, talking about these earnings, another thing I realized is, look, the large caps. This is before we get to China. The large caps are doing very, very well. We just saw the majors report. We'll break down those numbers in a second. But you have to focus, and you should own companies that have pricing power. You know who has incredible pricing power right now? McDonald's. You know who has incredible pricing power right now? Chipotle. You saw those numbers come out. You know who doesn't? Starbucks. Starbucks came down. They don't have that kind of pricing power, and the supply chain issues. If you go to Starbucks, you'll know, because I'm a tea guy. Feel free to make fun. They don't have English breakfast tea anymore. I go there to order a protein box. They don't have it anymore. Almost anything is out, and they say, sorry, we have supply chain issues. Still have supply chain issues. Plus, they're leveraged to China. And be careful there, because China is a growth engine of the world, accounting for 40% of GDP. I know everything about China. Why? Because that's why I thought the market would absolutely crash when COVID came here, because China, they absolutely closed China, which is the growth engine of the world. Make sure if you're buying a company, how much sales are going on in China. Apple, you don't have to worry about, because Apple's with the government in China, so they're fine. But a company like Starbucks is a little different. So not only have supply chain issues, but now they have China issues, and you're all over this China thing, right? I mean, it's industry by industry. So I just saw a price target from one of these educational companies go from 55 to 8.
Yeah.
The price target. I mean, everybody's like running for crazy, right? I mean, holy cow.
Yeah, there was so to your point, I mean, Apple reported blockbuster numbers. Starbucks is still looking to grow stores over there in China, but it makes you look and think what's next, because they started with China is a controlled country. It's they hardly let capital out, only capital flows in. That's the regime. That's the way they have power over there. What's changed recently is just them enforcing or cracking down. So we saw that with Jack Ma, how he kind of disappeared. Not kind of, he disappeared. Alibaba, has come back down off its recent highs. They shut basically down the Ant Financial, which is an arm of Alibaba, to go public. Then they went over to Didi just a couple weeks ago. They pulled the app. Tencent, which has the most popular social media
WeChat,
instant messaging WeChat that everybody uses, or a lot of people use. So it makes you, what if they just changed their mind and said, well, I'm being extreme here to make a point, but look at what's going on in extreme. They crack down on online education. TAL, if you have a chart, TAL, Frank, that stock was over $50 a share, I believe, this year. Mm-hmm. Now, I got to give some credit to some short sellers that I follow on Twitter. They've been calling that name out for over a year. You could argue they were wrong or they were early, but man, even though the stock has popped yesterday and I think today again, it's absolutely gotten smoked from its what? Do you have that chart up, TAL?
Yeah, I'm going to put it up right now.
Okay.
Yeah, so
was I thinking correctly? Was it over 50?
Yeah, well, it's up 15% today.
Right.
But it was 20 2 weeks ago, and it fell to $5.
Okay.
Actually, $4, and now it's like $6.
And the point there is that they can do anything. They don't have to go through procedures or anything. So what if they told Tesla, "Hey, you're done expanding," or Starbucks, "You're not allowed to open up any new stores"? That brings a big risk. And I encourage everybody, go to Kyle Bass did an interview on CNBC. Was it yesterday or the day before?
I think it was yesterday.
Okay.
I like Kyle Bass. Yeah, he's good.
And he made a very bold statement that at first I thought, okay, that's a bold statement and just kind of for attention in a sense. But it was so accurate, because he said, fiduciaries, how do you go from being a fiduciary for somebody and recommending that without opening up the door to tremendous amounts of lawsuits if things go bad? I mean, there's a lot of people that are going to get smoked off. And Kathy Wood, ARK Invest, I think she sold the majority. I read yesterday. I believe she sold the majority of her Chinese stocks out of her ETFs because, and no offense, I'm not getting on her or congratulating, but how do you not do that? Like, how do you stay invested in some of this stuff when you know?
Can't, with the government,
that's a big gray area. Now, that's a trading opportunity. Like I said, if you bought Tao the last couple of days, you're up. What did you say? It was up 15% today.
15% today, yeah.
So that's a huge risk that you just have to pay attention to. The easiest thing is just to avoid them. You don't have to buy Chinese stocks to make money, but you do need to pay attention to who has the supply chain issues over there, who's trying to grow through China, and just know that's a headline risk where you could wake up at any moment and bam, things are changing on a 180.
When one of the major trends I'm seeing right now, and I know a lot of people do not know this, and because I didn't even know it, and I follow the markets, that in the past 3 months, what have we seen, right? What are the risks to the market? You have inflation, right? What we've seen. We've seen labor shortage, which we've seen supply chains, right? Just delays in supply chains. And who does this hurt the most? It crushes small cap companies, especially small cap companies that don't have earnings, especially on the inflationary front. So right now, our small cap market is telling us inflation's running wild. They do not have the pricing power of the large cap companies. They can't pay as much as the large companies to hire good employees right now. The supply chain issues, they can't bid or they can't even compete to get their products over here quicker than the large guys because and right now, from sources I know, you have the Amazons, the Walmarts, they're outbidding everybody to the point that they're taking losses. They're taking losses to destroy a lot of their competitors just through the container process. So what does that result? Well, you look at the Russell and you say, well, the Russell's up nice this year. Let me tell you something. The last 3 months, and I said this to you, Daniel, that's nearly 70%, which surprised you, nearly 70% of the Russell 2000 companies are trading lower over the past 3 months. That's a crazy stat. I didn't know it was that high. You would think like, wow, the market's in near all time. Even if you look at the new highs and lows list, these as of yesterday, we saw on the NASDAQ, it was 55 new highs. It was over 250 new lows. You wouldn't know that, right? Because what are you seeing? You're seeing the majors freaking report, Microsoft, Google's, Apple's, and just the numbers they report are credible. AMD has reported great numbers too, and they just finally broke out. So let's see if they can break through 100. But they revenue jumped 100% for the second quarter in a row, grew revenue. So AMD is really killing it. A name that I feel like is under the radar because all the big guys reported. But be careful because this is opening the door for more and more money to go into the larger names. Why? Because these are the companies that are going to announce the biggest buyback programs. And who is that? We have Chubb in the portfolio, which is your name, right? In Curzio Research Advisory portfolio, right? They reported good numbers, stocks down just like everybody else. It's typical. But we're up nicely on that. We're 40% plus. But they announced a monster buyback, right? So, and then that's great news. And then you have AutoNation, same thing. I mean, both these companies are buying whatever, 7 to 9% of their total float outstanding. Then they have, money to pay for good labor, which small companies don't have, and they have pricing power for inflation, which a lot of small companies don't have. So you're seeing a major shift into the larger names right now, and it's a tough environment for small caps, and I feel like that's being lost among all this. Dan, I don't see people talking about that where, hey, the markets look good and they're up and they're near all-time highs, but if you look at the underlying trends in the market, there's a lot of names that are getting murdered right now.
Yeah, absolutely. And it's not, it's a bummer because the more regulations and the more influence and the more political headwinds you have are going to cause the gap between haves and have-nots to widen. I personally believe that's done on purpose. That's a conversation for a different time, and I know a lot of people disagree with that. But if you have continuing regulations on all kinds of fronts, from mask mandates to travel limits to everything, that's going to coupled with inflation, there's no way that can't cause the gap between haves and have-nots to go wider. And what that means is go into big cap stocks. And that's going to be the smoothest sailing for the next few months at least on that front. Doesn't mean there's not going to be great opportunities in small caps, but just be prepared for choppiness to lower prices until the market either gets comfortable with higher prices across the board and or we get a new growth catalyst. And unfortunately, that would just be return to normal, openings up. Everybody kind of gets over that fear. But again, we have to play this tug of war. You have the media headlines and possible restrictions coming down, and yet you have individual companies reporting they're not seeing any behavior. So,
yeah. And
welcome to the puzzling world of investing.
I know, it's so funny.
That's why we love it, though. But that's just I made the comment. Sorry to finish this. I made the comment, we were having this conversation yesterday, Frank. Your Apples, Googles, and all that, they're basically like treasury bonds. Like, how do you not view them as quote unquote safe? And I know that's a terrible word for our business, but you know what? When shit hits the fan, why wouldn't you buy one of the biggest, most powerful, comfortable names there is? Yeah, if the market tanks, they're going to sell off as well. But I don't know. It's just the big dogs are going to continue to get bigger and attract capital, and we have more money flowing around than ever before. So that's the smoothest sailing right there.
Let's talk about the numbers.
I mean, they're just goofy. So they're unfathomable. It's hilarious.
I mean, again, you put them together. Microsoft, right? What did they report in revenue this quarter?
Oh, 40-some billion for 3 months.
46 billion. Net income, over 16 billion. Google, 61 billion in revenue. Over the past 3 months, net income, 18 billion.
And Apple says, hold my beer.
Apple's like, guys, you have no idea. We're the king of the world, and you're nothing, Microsoft and Google. 81 billion in sales, almost twice Microsoft, and their net income of 21, or close to 22 billion. So let's put this in perspective. You're looking at like close to 190 billion in revenue and $56 billion in net income when you combine those three. Just those three companies. We didn't see Facebook and Amazon, which are reporting tonight, right? And of course, I'm a nerd and a geek, and I just want to put things in perspective. That's higher than the GDP of Algeria, Ukraine, and Kuwait. And we're talking 3 months. 3 months of sales.
Crazy.
So if you don't think that these companies are bigger, how do you generate that much? Like, I mean, people have that much money, and businesses have that much money. I mean, where are they getting all that money from? Unbelievable numbers that, I mean, I would actually say the $180 billion in revenue. I mean, you can go back probably before the tech boom, 25 years or whatever. I mean, I would be surprised if the top 100 companies, or maybe even the top 250 companies, before generated that much revenue for the year. I mean, it's just, to me, it's incredible. But, you're looking at these names, they're going to get bigger and bigger. Have exposure to it. I mean, even if it's like to one or two of these, because again, a lot of these, the Microsoft, Apples are paying a dividend. They're buying back loads of stock. Their balance sheets are like, 50 billion plus to 200 billion strong. I mean, these numbers are just incredible when you're looking at the rest of the market. I mean, IBM has $125 billion market cap, and you're looking at these companies having $2 trillion market caps. Just to put it in perspective, well, IBM was the industry leader 20 years, 25 years, IBM. But, look, the large caps, you have to have exposure to it. It's small caps, you're going to have a great opportunity to buy. I actually, in my newsletter comes out today, my Curzio Venture Opportunities, great strategies. I offered 3 stocks on our watch list. Just said, be careful because they're reporting. And I don't want to buy anything or give any recommendations before they report. Because if you beat, you're not getting rewarded. And if you don't, if you have supply chain issues or anything, these names are going to fall 15% plus. And that's what we're seeing where, AMD, I mentioned earlier, there's another company, guys, when you get a chance to listen to the conference call, Dan and I talked about this in the past, Boeing, right? I mean, Boeing reported really good numbers, Dan. I mean, you covered that call, and, that turned out to be an amazing call. They reported actual earnings. Everyone was expecting a loss, right?
Yeah, and, to your point, you've been on the airlines. All those delays and such were basically a win, not if they were coming back, and that's starting to happen. Their backlog grew. They actually reported our earnings beat. They actually reported our actual earnings instead of a loss like expected. So the stock's up, I don't know, $10, $13. That's probably a couple percentage on its price. But again, there you go. So you have companies in the airline sector going after Boeing, initiating orders again, and yet then you have these overhanging of, well, what if you have more restrictions on travel and such? So there's a lot of gray area right now. But yeah, Boeing hit it out of the park. That's doing well. And again, the conglomerates are going to continue to do fine. And as you said, they're damn near the only game in town. So what are you going to do if you need an airplane? It's them or Airbus, right?
Yeah. I mean, Boeing, look, you're seeing demand across the board, even though we have the international market still closed. They were saying 2021 is an inflection year, turn the corner on the vaccine. Commercial airplane segment, continual momentum on safely returning to the 737 to service. I mean, seeing lots and lots of new orders. China's recovered to 80% of pre-pandemic levels. But other parts of Asia are further behind. Global fleet is at 80%. But all these guys are going to have to upgrade their fleets. MAX deliveries are starting to pick up. And they had 5,500 MAX deliveries. Now, I'm not telling you to go buy Boeing, but I could tell you something that, if you're looking at an airline where these things are down, the major airlines are still down, not Southwest, but, you're looking at American Airlines, also cited huge demand, Delta. I mean, you're flying on these airlines. You see how crowded, they're all packed. The amount of money you're paying and pricing power is incredible. I mean, this thing's going to get back to normal pretty soon, regardless of how much they're trying to push this Delta bullshit. It's going to get back to normal pretty soon. And I will end on that because, one, it's not just the Delta virus, but it's giving you an opportunity to purchase a lot of these stocks where you're going to see massive demand. Look at parts makers inside Boeing. We recommend a few of those companies probably 4 years ago when I toured the Boeing facility. I like do boots on the ground research. There's tons. There's like 80 of them that are publicly traded that are just going to see demand explode and orders explode. And those guys make money as those orders come in. So, depending on when you see that in the supply chain, you're going to look at companies reporting amazing results within the airline industry because there's so many orders. These companies have to upgrade their fleets. You're seeing massive demand in the U.S. You're going to see every country open, even I think Canada, which is like North Korea now, but they finally opened up where, U.S. travel and everything. Got to make sure you're vaccinated. Probably have a big sign around your neck and a shirt saying you're vaccinated, but that's beside the point. But I will end with this because the news out right now is how Pfizer and Moderna are trying to testing where they want to give the vaccine to kids between 5 and 11 years old. Guys, from someone that studied this a lot and from someone who has kids in that range, and my daughter's 13, just to put in perspective, because they don't do this, 3.6 million children in the United States tested positive for COVID so far, and less than 300 died. That amounts to 0.00825%. Be very, very careful if you're going to if your child has underlying diseases or has asthma or something, I get it. But if you're just randomly going to give your kid, I could almost guarantee that more kids are going to die from this vaccine than be safe from this vaccine at that age group. We've seen it that it doesn't affect. I don't know why that they are pushing that so much. I don't know why. And listen, if you have, again, if your child has underlying conditions, that's a different story. And I'm not anti-vaccine saying that not to get it. But that would scare the shit out of me considering watching my kids go to school in Florida the whole entire time. I know it just opened up for some people in a few months, the whole entire time, kids getting it at that age group on my daughter and being able to basically 2 or 3 kids got it and that was it. It didn't spread. I don't know why it doesn't spread, but just seeing that and how they're just pushing this Delta thing, even though if you're vaccinated, you really don't have anything to worry about. You really don't. 95%. They're just pushing it. You're not seeing an incredible amount of deaths right now anymore as well. So for me, when I'm looking at this, it's going to create a buying opportunity, huge buying opportunity. The Fed's not going away. They're going to keep rates low. They're going to continue to buy bonds, and they're all in for another 2 years, which means every time you see a pullback, and that's what I like about small caps pulling back right now, there is inflation in the markets, but there's some names in small caps that are getting nailed. 70% of that index is down over the past 3 months that don't deserve to get nailed. And it's going to provide a great, great buying opportunity, which you're going to see in, Curzio Venture Opportunities and several other newsletters where, I might push a couple of small caps even into Curzio Research Advisory. But for now, the companies that are buying back stock, the larger companies, even the technology companies, they're still buys here. They're still doing great. But I don't know if there's anything else that really stood out to you during earnings season because a lot of companies have reported, especially this week.
Yeah, like I said, there's a handful that, we have portfolio holdings that are going to report. Those are exciting. And then a big watch list to just kind of continue building the thesis, like I mentioned a few there. So don't feel like you have to act on something every single day, but just continue to build your thesis and pay attention. And that's all I can, hopefully that's educational. I know that's not exciting, but we'll have a lot of fun in the weeks ahead.
Yeah, I people listen to podcasts and are like, buy large caps.
Yeah.
Like,
oh, great. I just wasted an hour of my life to listen about Apple.
And I know doing this all my life. Doing it all my life, basically. My dad, 30 years, did it, and I've been doing this for close to 30 years. People love a great story. They love the great story. Like the story they love more than, hey, buy Chubb and they're buying back stock. I got to listen to this podcast. This guy tell me to buy Chubb and Amazon. No, they want these small. You're going to get that opportunity, but first and foremost, you want to be protected because a lot of people, like we've seen with the meme crowd, go in and out of this market and get freaking wrecked. Right? They made money, and a lot of them have gotten wrecked, and then they get the taste of them out, and they're like, "I'm never coming back to the market." It's our job. There's times to go all in, and there's other times where you have to be careful. When it comes to small caps right now, guys, be careful. start looking at names and then watch them report earnings. If they come down on bullshit, just, it could create a buying opportunity where you're buying a great name down 35% from its highs. And believe me, there's a lot of small caps that are down more than 30% from their highs. And really on little news, just because there's money flowing out of that sector into large caps. And that's evident from, the money flows at things that we track with Bank of America and stuff like that. And Dan, you know who else tracks that? Is Luke Downey.
Absolutely,
being able to see these trends, So, Dan, I want to thank you so much for coming on. We covered a lot today, everything. Guys, earnings season right now is the best time. I enjoy it. Daniel enjoys it. And, we're going to have lots of fun. You're going to see lots of earnings updates and things like that in the portfolios. But, really looking forward to earnings season. And Facebook and Amazon are on deck, and those numbers should be absolutely insane. But I think it's around 40%, 45% of the S&P reported. So by the end of next week, it's going to be well over 70%. So lots of fun things, lots of new ideas. So definitely listen to the podcast, listen to a lot of things that we write, and pay attention to the newsletter. It's going to have lots of ideas open up. But Dan, thanks for coming by, man. I appreciate it.
Absolutely. Same time next week. We'll see you guys.
All right, guys. So once again, I'll mention it one more time for you, for the podcast listeners only. If you want to find out more information on Big Money Report, it's launched to you today. To podcast listeners, it's www.bigmoneyreport.com. Just take a look at it. Even if you don't subscribe, you're going to see, we have a nice video. We didn't put in like an hour video and stuff like that. It's a really cool promotional video where we show you why we're so excited about this. Luke's also doing, like you said, the video newsletter. He's got a great personality. He's a lot of fun, but, he's really part of that educational theme, which, those are the editors we want to hire that are going to educate you, not just give you a stock pick here or there. And, we did make this newsletter affordable, less than $100 a year, 30-day money-back guarantee, so anyone could try it. And if you don't like it, fine, no question, your money back, no questions asked. But that's available to you, and tomorrow we're going to be launching it to the masses. So www.bigmoneyreport.com. And guys, that's it for me. Thanks so much for listening. Thank you so much for your support, for your CEO token holders. Again, a lot going on behind the scenes over the past 6 months, especially over the past month. Really, really exciting stuff. And I'm going to be reporting some news to you shortly, which we're excited about. Just, again, this industry, we got in early. It was frustrating as hell because I'm like, why isn't this thing developing? It's starting to really develop and come together. And it's just great that so many companies are coming to us and asking questions, since we've been through the whole process from A to Z, when 98% of people have not been through the process where we're actually trading our token to retail investors to buy. Okay, that was the goal. We did it. We told you we were going to do it. And now a lot of people are following our lead. A lot of people are following our token structure, which is very shareholder friendly, because we looked at the long term of this market and how big it could be. We didn't look at it as a money grab, and really, really exciting stuff coming up. So we'll be sending emails out, and really good stuff for CEO tokens. So guys, thanks again for all the support. Thanks for listening. I'll see you guys in 7 days. Take care.